sheet number is 23 DBS 23F2005.
Hi guys, my name is Harisni Hasima. My metric number is 23 DBS 23F2036.
Hello, my name is Nurul Haziana Binti Asmo. My metric number is 23 DBS 23F2001.
Hi, my name is Istizat Balkis. My metric number is 23 DBS 23F2011. What is accounting concept?
Accounting concept is a fundamental principle or assumption that guide the preparation and presentation of financial statements. This concept ensures consistency, accuracy, and reliability in accounting practice, facilitating the interpretation and comparison of financial information. There are few examples of accounting concepts that can explain in this part of view, such as objectivity concept, historical cost concept, money measurement concept, going concern concept, and separated entity concept. This is a few examples of accounting concept that explain in this part.
There are 5 types of accounting concept. First, the objectivity concept. The objectivity concept. The concept states that accounting should be free from bias and personal opinions. Financial information should be based on the verifiable evidence and facts. For example, when recording the value of inventory, accounts should use the purchase price supported by invoices rather than their own estimated value.
Second, the historical cost concept.
According to this concept, assets should be recorded on the balance sheet at their original cost at the time of acquisition. For instance, if a company purchases a piece of machinery for 10,000 ringgit, it should be recorded on the balance sheet at that cost, even if its market value changes over time.
Thirdly, the money measurement concept.
The money measurement concept. This concept suggests that only transactions and events that can be measured in monetary terms should be recorded in accounting. For example, a company's employee morale or the quality of its customer service, while important, cannot be qualified in monetary terms and therefore are not recorded in financial statements.
Fourth, the going concern concept.
This concept assumes that a business will continue to operate indefinitely unless there is evidence to the contrary. Financial statements are prepared under the assumption that the company will not be liquidated in the near future. For example, when preparing financial statements, accountants assume that the company will continue to generate revenue and meet its obligation for the foreseeable future.
Lastly, the separate entity concept.
The separate entity concept. The concept is that the business is separate and distinct from its owners, shareholders. Transaction of the business should be recorded separately from the personal transaction of the owners. For example, if the owner of a business withdraws money from the business for personal use, it should be recorded as a withdrawal or dividend, not as an expenses of the business.
Okay, what is source of documents?
The source of documents can vary widely depending on the context. Documents can originate from governmental agencies, academic institutions, private organizations, individuals, or various online sources. It's important to consider the credibility and reliability of the source when evaluating documents for accuracy and validity.
Today, we'll see 4 sources of documents. Firstly, credit purchase.
Credit purchase. When a supplier sells goods on credit to Biso Bona Enterprise, it receives an invoice. It means when Biso Bona purchase goods on credit from a supplier, they will receive an invoice from supplier. The invoice typically show particulars of the goods or services are purchased, including the parties to the transaction, date, quantity, and price. The original invoice is received to Biso Bona Enterprise and the copy will retained by the supplier to support the double entry bookkeeping transaction.
Second, credit note.
Purchase return or return outward. Viso Bona Enterprise using purchase return transaction when the buyer returns products to the supplier. When following source of document credit note is a quit receipt for Viso Bona Enterprise from supplier. When the Viso Bona Enterprise return the goods to supplier because of the good damage, defective and incorrect item received or dissatisfaction with the product. Indirectly, such document which is a credit note will be issued by supplier to Viso Bona Enterprise for to inform that the account has been credited by the stated amount. It is issued to repair errors such as exaggerated invoice amount. If the current discount rate is not applied, the item may spoil during the warranty term and the item does not satisfy the buyer's specification, it may be returned to the seller as a sales return.
Third, credit sale.
Credit sales. When a seller sells goods on credit to a buyer, it issues an invoice. It means when Viso Bona Enterprise sells goods on credit to customers, it issues an invoice from Viso Bona Enterprise to customer. The invoice typically shows the particulars of the goods or service are sold, including the parties with the transaction, term of payment, the date, quantity, and price. The original invoice Viso Bona Enterprise sent to the customers. The copy one is retailed by the Viso Bona to support the double entry bookkeeping transaction.
And lastly, memo.
Drawing goods for personal use. Drawing goods for personal use when Fatomi, the owner of Viso Bona Enterprise, made decisions to take off cash, goods, assets from the business for his personal use. A memo will be received to Fatomi as the owner of the company. Memo are typically issued by individuals within a company's Viso Bona Enterprise department or by accounting firms to communicate important information, reminders, or updates related to financial matters. These memos can be circulated among employees, clients, or stakeholders as needed, and also it is frequently used as a note on certain business events that must be announced if no other documents exist, and is typically shared internally and within the company. A memo was issued as a notice when the corporation received additional capital, asset, and goods drawings or experienced an extraordinary event.
So what is books of prime entry?
What is books of prime entry? Books of prime entry, also known as books of original entry, are the first place where financial transactions are recorded in a business's accounting system. These books are used to record specific types of transactions such as sales, purchases, cash report receipt, cash payments in a systematic and organized manner. Examples of books of prime entry include the sales journal, purchase journal, cash book, and return inward journal. By recording transactions in these books first, it helps in maintaining accurate and detailed financial records, which can be summarized and transferred to general ledger for further analysis and reporting.
There are 4 books of prime entry. First, sales journal.
Record details from the sales invoice in chronological order. Include columns for the date, customer name, invoice number, description of goods sold, quantity, unit price, and total amount. Total amount periodically, for example, daily or weekly.
Second, purchase journal.
Purchase journal. Record data from the purchase invoices in chronological order. Include column for the date, supplier name, invoice number, description of goods purchased, quantity, unit price, and total amount. Total the amounts periodically.
Thirdly, cash receipts book.
Cash receipts books record details from the receipts acknowledging payments from customers. It includes columns for the date, customer name, invoice number, amount received, and mode of payment. It also totals the amounts periodically.
Lastly, cash payment book.
Cash payments book. Record details from the payment vouchers documenting payments to suppliers. Include columns for date, supplier's name, invoice number, amount paid, and mode of payment. Total the amount periodically.
Thank you for watching.